Today we are going to discuss about the journal entries. First of all, before going to journal entries, let us see the rules. Personal account, it deals with names of the persons and artificial persons like companies, etc. Then here the rule clearly states that debit the receiver, credit the giver. Then comes towards the real account. It deals with the properties and assets of the business. Here, land, machinery, cash, stock, all these things deals. Here the rule clearly states that debit what comes in, credit what goes out. Now, we come across the nominal account. Every business has certain expenses, losses, gains and incomes. And this account deals with such kind of gains and incomes. Now, for example, purchases, sales, salaries, discounts, commissions, all these things comes under this nominal account. Here, the rule clearly states that debit all expenses and losses, credit all incomes and gains. Now, let us see the format. Always we should write journal entries in the books of whoever it may be, the name of the company or the party for the year or dated, whichever date is there that ended. Now, here date, particulars, LF, debit, credit. So here you can see the very first transaction here says that received cash from Akbar. Here cash is one issue and Akbar is the other one, other aspect of the transaction. Cash comes under real account and Akbar comes under personal account. Here the rule clearly states that debit the receiver, credit the giver. We are receiving cash from Akbar. So Akbar is giving us, so credit Akbar's account. At the same time, what we are receiving? Cash. Cash comes under real account. The rule clearly states that debit what comes in. So it is the cash is coming in, so debit. So the journal entry is on the date 1/1/2024. Cash account debit to Akbar's account. And the amount is in the debit column, write down 6,000. In the same way on the credit side, you write down 6,000. The narration or a description, it says that being received cash from Akbar. So the transaction is over. Now we come across the second transaction, 5th January 2024. Here cash purchases. Cash is one aspect of the transaction and the purchase the other aspect. Here purchase comes under nominal account because it is an expenditure of the business and the cash comes under real account. And the rule clearly states that in the nominal account, debit all expense losses. When you are running a business, you must make purchases first. That is an expenditure to the business, so that it comes under debit. Then, when you are buying goods, ultimately your cash reserve will be lowered or goes out, the cash goes out. Credit what goes out as per the real account. So now this is credit. Now the transaction here, the journal entry is purchase account debit to cash account. Here we write down the narration or a description, being purchases of goods in cash. You are buying goods on cash. Now the third entry is very simple, paid cash to Ram. Here we are making payment to Ram. Cash is one aspect, Ram is another aspect. And Ram comes under personal account because the name of a party, name of a person. Then cash is an asset, it comes under real account, And the rule clearly states that when you come across the name of the party, debit the receiver, credit the giver. Here you can say debit the receiver, credit the giver. So, is Ram is giving or receiving? When we are making payment, Ram is receiving. That means for us, who is receiver here? Ram. Ram is receiving because we are making payment. So, Ram's account debit, this is a debit, debit the receiver. Then for us, when we are making payment, our cash is going out of the business. It is going out of the business. The cash is going out of the business. So, ultimately, credit what goes out as per the real account. That means this is credit. So, the journal entry says that 7/1/2024, Ram's account debit 1500 to cash account 1500. We don't write credit here. Actually, it is credit, but we don't write. We don't show here. Being paid cash to Ram. That is a narration or a description. Now we come across the 12th point, 12th Jan. Cash sales rupees 4,000. Cash is one aspect. Sales is other aspect. Sales comes under nominal account. Cash comes under real account. Then the rule says that in the nominal account, sale is an income for a business. Sale is an income for the business. Purchase expenditure, sale is income. When you sell goods, you receive cash. So, in this one, credit all incomes and gains. Sales comes under credit. Credit. Then, when you are selling goods, what you receive? You receive cash. Cash is flowing into the business. Debit what comes in. Debit what comes in. So here the cash account is debit. So the journal entry is 12/1/2024. Cash account debit 4,000 to sales account 4,000. Being sale of goods in cash. You are making sales cash in cash. We can make goods or sale in credit also. That we'll see later. Now. On 13th Jan 2024, credit sales to Robert. Here sales is one aspect, Robert is another aspect. When the name comes, it comes under personal account and this comes under nominal account sales. Now, credit sales to Robert. When you are selling goods, who is getting benefited? Robert is getting benefited. So, debit the receiver or beneficiary. So, here we are debiting his account. And sales, for us sale is an income. Credit all incomes and gains. Credit all incomes and gains. So, sale is credit here. So, the journal entry is 13/1/2024. Robert's account debit 3,000 to sales account 3,000. Being sale of goods to Robert on credit. You can observe here, on cash means cash is debited, on credit means name of the party. Sales always in the credit only, purchase always in the debit only. That you have to remember here. Then, Jan 18th, credit purchases from Aman. Here purchases that Aman. Aman comes under personal account, purchase comes under nominal account. The rule clearly states that when name comes, personal account, debit the receiver, credit the giver. When we are buying goods on credit, Aman is giving us. Aman is giving us. We are receiving. So, credit the giver as per the personal account. This is credit. Then, purchase. Purchase and expenditure for us. Whether we are paying cash or credit, we will pay later, no problem. But right now, we are buying goods. Purchase comes under nominal account. It is a expenditure for the business, so that debit all expenses losses. So, purchase is debited. Purchase is debited. Now, the entry is on 18th. Purchase account debit 1,000 to Aman's account 1,000. Being purchase of goods from Aman on credit. That is the narration. Now, 24th Jan, received commission. How you receive commission? In the form of cash. In the form of cash. So, we have to understand. We have to think that by cash. So, two things are there. One is commission, one is cash. Cash comes under real account. Commission comes under nominal account. Commission comes under nominal account. Commission comes under nominal account. So, here received commission. So, you are receiving. So, debit what comes in cash account. Then commission received. Commission received is an income to the business. Commission paid is an expenditure. Commission received is an income. Commission paid, you are getting some, your profits are going to reduce. In one way we can say it is little bit our expenditure, we can treat it as. So, now here the question is that on 24th Jan 24/1/2024, so you are receiving commission in the form of cash, debit what comes in and credit credit all incomes and gains. As commission received an income, you credit it. Now the journal entry is cash account debit, cash account debit. The amount is here 200 rupees. To commission received account, commission received also you can write down commission. Being the narration is being commission received, being commission received. That means we are receiving commission, so we are writing that one. The entry is in the credit also 200. Now let us see the last entry, 27 Jan 2024. Paid rent by check. Check means through bank, Bank is an artificial person. That means every bank account will be in somebody's name or a company's name. A bank account means it represents somebody's name, So we apply the rule, debit the receiver, credit the giver. Now here, rent is an expenditure. You are paying rent, that comes under nominal account and it comes under artificial person account. Now here, the rule says that debit the receiver, credit the giver. We are paying rent, so our bank balance is going to get, we are credit the giver, we are the giver. Our bank balance is going to get reduced. At the same time, nominal rent. Rent means nominal account, all expenses are to be debited, so rent account is to be debited, so debited. So the journal entry is very simple. On 27/1/24, rent account debit, rent being an expenditure, we have to debit it as per nominal account. 2, bank account, our cash we are making payment through bank, so credit the giver, being paid rent by check, that is the amount is 2000. My dear viewers, students, remember always, whenever we are doing any journal entry, these rules are very important. You have to observe whether it is a person name or whether it is an asset or a property of the business or whether it is an expenditure or income to the business. These things you have to remember, and thank you for watching. Thank you. Have a nice day.